All right, boys, good morning. It's Wednesday. It's FOMC. We just got this brand new camera. So, first time we're using the camera in the video. Charlie. Okay, he just burped. He just burped in my face. So, regardless, boys, today we're going to be talking about risk management and how to manage your risk. This is FOMC today. I am trading today. There's going to be a whole different trade recap. I guarantee you guys are probably going to be watching this video on the weekend. So, it doesn't even matter. Regardless, you guys would have already known the results of the FOMC day, so I don't think I'm going to record anything to do with the trade. I just really want to focus this video on teaching you guys how to increase your risk level and being able to convince yourself almost that what you're risking is okay, while also knowing what proper risk management is. Yeah, boys, I'm just hyped to have this camera, bro. So let's go over the camera I bought because I'm going to be using this a lot. So let me show you guys. So this is the camera that I got. I think it's a Sony ZV-1F or something like that along those lines, bro. It's pretty good. It's better than my iPhone. Obviously, I don't want to record off my iPhone anymore. That is cringe, bro. It is terrible. I mean, it's not terrible. It's pretty good. Like, the iPhone cameras aren't terrible. But, you know, I needed a camera. I wanted a camera. I'm going to be bringing this a lot. I'm going to be bringing it to Florida. All right, Charlie, what are you doing, bro? Come on. Come on. My dog's just looking at me, giving me some weird looks. So we gotta get the rest of the video continued. I think I'm actually gonna end up leaving my house. I'm gonna bring you guys along somewhere. We're gonna talk about some risk management, boys. So we just wrapped up trading. We got some TikToks out. We got some stuff done. Let me get into a new change of clothes because obviously don't want to be talking to you guys about some risk management with this robe on. All right, boys. I got my shirt on. We're literally just sitting in my bed right now recording this video. And let's get started with it. So, obviously with trading, you're going to have three things that you need to become profitable, or to become a profitable trader. There are three things that are going to get you there. Your first thing is having your edge, your strategy, what you're using every single day to take your trade. That's about 10% of the skill, in my opinion. The other 80% is psychology, which has many aspects. You can't just cover all of trading psychology in one video. There's many things that go into that, in my opinion. But risk management is another super big thing. Obviously, if you take a loss, you want that loss to be smaller than any win that you would take. So now when you win a trade, you want that win to be able to eat out that loss. And obviously, this all sounds simple. It all sounds very easy, but it's not. At the end of the day, there's a lot of things that go into risk management. You got to be able to know your lot sizes, being able to have a plan, which is going to be the most important thing. Step one of being able to have good risk management is to go in every single day and have a plan for your own risk. My personal thing, if I'm de-risking, I'm going to be trading 2 contracts or 1 contract, and that's for the NASDAQ and that's for the S&P as well. And then on my normal days, I'll be trading 4 contracts or 3 contracts. Now, how do I choose how much contracts I'm going to be trading is depending on what my risk to reward is on the trade. Obviously, every single day is different. The market's going to move more on other days than it is going to be than it is on other days. So other days you could be looking for scalps. You have to almost understand when the market moves 50 points on the NASDAQ, for example, it is basically, if it moves 50 points on the NASDAQ, that I think for 1 contract, that's $100. So if I'm risking 2 cons, obviously that's $200. 4 cons, $400. So you have to know exactly what you're risking. I did not just buy a camera to literally sit in the same spot, but I bet a question that many of you guys are asking right now for me is, what should my risk be? Your risk should be 1% of your account every single day. Depending, so if you have a $50,000 funded account, you should be risking $500 every single day. Now, does that mean to risk $500 for every single trade? Hell no. Does that mean risk whatever, even though it's your first day on the funded account, should you be risking 1% a day? Hell no. Bro, my first month on my funded account, I was risking 0.2 to 0.3% of my account every single day. So this entire past month, I have not been using my own proper risk management. I haven't even been risking 1%. I have personally been risking about 150 bucks every single trade. My risk is now going up. Going into February, going into this next month, I am increasing that risk because I've been able to prove to myself that I'm able to be profitable once again for another month using less risk, getting myself comfortable. Bro, there are levels with your emotions that the second you start risking more or knowing that you're able to make more in a trade, you are almost going to like want to like, I don't know, like you get emotionally like controlled by some other aspect. Like you have to almost like increase your risk daily, like being able to like minimize it. My first ever month on trading on a live account with real money, I was on a live account with about $1,000 in it. I was able to make something on it, luckily. But regardless, on that $1,000 account that I was risking, 1% of $1,000, I'm pretty sure is $10. Like, don't get me wrong. I went to high school, did my math. I am kind of stupid, but I'm pretty sure 1% of 1,000 is $10. I was risking about 2.5% daily. I was not very happy with that because I knew I should have been risking 1%. But obviously, you're not really able to learn much, and I almost got a little bit too ahead of myself. And now when I went to the funded, I was playing around with obviously hundreds of dollars. Now it's instead of playing around with $10, I'm playing around with hundreds of dollars. So that's almost like a different emotional aspect that I had, like being able to like overcome. Which obviously is something that like a lot of people probably needed to hear. So it doesn't mean that necessarily the second you get your funded account, you should just start going crazy, going blazing at it, thinking that you're gonna pass that account, because that's not what's gonna happen. You got to be able to be comfortable within your own risk, but just make sure you don't go higher. Don't start over leveraging, bro. Another thing that I see people do all the time is they will be, for example, on a paper account, and they'll be following the rules, following all their stuff. The second they get on a funded, the second they get on a live account, they start over leveraging, they start over risking. That fails a lot of people, bro. Risk management is super important. You like almost can't let it get away from you. If you can't understand managing your own risk, going in, knowing what you're going to lose, knowing what you're going to win every single day, like you're going to have some trouble becoming a profitable trader. Even though I'm speaking as myself, not being profitable yet, even though I've had multiple winning months, I mean, I don't know if you guys want to consider me. I mean, I'm learning. I'm going through this journey. I've documented it all. My little buddy right here. This shirt's pretty fire, dude. Actually, I kind of want to turn this around for you boys. I want to show you guys. It's got the golf stuff on the back of it, bro. I bought it about like a year ago. So, I mean, I just wanted to show you boys. I'm just glad now that we got a camera, bro. We could start like doing whatever we want with this John, you know? Like start fiddling, bringing it everywhere, bringing it on trips, making all these videos for you guys. I'm excited for that, bro. But most importantly, let's get back to getting a little bit of risk management talk in. And now, another super big aspect is if you're trading multiple contracts, you're possibly going to have multiple profit levels. You're going to have multiple places where you want to take profit. You're going to have multiple levels where you want to exit your position. TP1, TP2, TP3, regardless. Now, if this is when it gets tricky. Now, because if you take a loss and one of your levels hasn't been hit yet, let's say you're in a trade of 3 contracts, you get 2 contracts off of your first level and you keep a contract to your third level. If you hit that TP1, you have to manage getting better where you're going to be moving your stop loss to break even, because now if you end up hitting that break even, you won 2 contracts at least with that trade. Necessarily though, if you end up taking a loss, let's say you enter a trade, your stop loss goes straight to the price goes straight to your stop loss, you get stopped out on the position, you're not going to be getting stopped out of 2 contracts like you were taking a win. You'd be getting stopped out of 3 contracts. So now you almost got to like focus. I wouldn't worry about that too much until you could like almost already prove to yourself to be a profitable trader, because that's when risk management gets more tricky. Because obviously, let's say, for example, you want to trade with 2 contracts, but then your stop loss gets hit with 3 contracts on the next trade. You may no longer be experiencing where your win just ate your loss, but your loss could have just ate your win. So that's when it starts to get really tricky. So with stuff like that, like I almost like advise to not necessarily stay away from, but until you could prove to yourself that you could be a profitable trader, I wouldn't be messing around with that too much. Obviously, I could have used it as a benefit this month where I could have moved my stop loss to break even and exited a position, and that would have made me definitely some more money this month. But at the end of the day, like, you almost have to find that balance that you have yourself, you know? It's like nobody could really give that to you. But yeah, regardless, hopefully I was able to cover the most of what I know about risk management. Hopefully I was able to help one of you guys out. That's all I care about, bro. As long as one person watches this video and now understands more than what they did when they started this video, that's all I care about, bro. That's all that matters at the end of the day, bro. Because I remember when I was like, I would have loved to like listen to myself talk now. Like, bro, dude, I would have I learned so much, bro, and it's still every single day I'm learning more and more. Obviously, we're nowhere near where we want to be or nowhere near our goals. But at the end of the day, boys, you guys will be on this channel and you guys will see this all happen, bro. Again, like I said, I started making YouTube videos on this YouTube channel for myself just to track my own trades, just to see, like, it's almost like an extra method of, or an extra way I use as journaling. But now, yeah, we're going to be going into a very, very cool period where we got this sick ass camera now. So we're going to be able to go around, make some cool videos for you boys, and do whatever I want. But other than that, boys, I will catch you guys on the next one. Peace.